Kaustubh Belapurkar from Morningstar. Kaustubh, hi, morning. The debate this morning in the newsroom was whether or not this is fair to shareholders. I mean, can HDFC AMC take that kind of exposure for whichever group it may be and a sizable sum of 500 crore rupees on their books?
Right. Hi. So, I think this is an interesting sort of thing that's played out. Obviously, from an investor's perspective, it's useful given that it's providing liquidity to something that, from a mutual fund investor's perspective, it's useful given that it gives them liquidity on which is something that they didn't have clarity on. But from a shareholder's perspective, I would say interesting because obviously there is still that overhang in terms of, when is the transaction going to happen and how is it going to work out. Obviously, the comfort being that there is collateral that could potentially be unbound in case, push comes to shove. But I look at it from another perspective, which is, looking at the long term. Sentimentally, this is going to help HDFC AMC because investors will have that kind of confidence saying that, okay, they kind of tided us through this albeit difficult time. And, sentimentally in terms of flows, it could be a huge positive over the long term for, just thinking as an equity shareholder and for HDFC AMC.
But should I say poor HDFC AMC shareholders? I mean, they did not sign up for this. They simply signed up for HDFC AMC to manage and run schemes, not use the capital to bail out some group.
Right. So I'm with you on that, Neeraj. I mean, it is a little bit of what you would say, a little bit of player thinking as a fund investor versus a stock investor. But I'm sure, HDFC, would have taken that judicious call as a management that, look, we see, there are backdoor talks that are going on. I'm not privy to them, but, we need to hear that there is something that's pretty much close to being inked. And if not, then obviously your collateral, which is still at a slightly, higher than lending limit, which is available to sell off in case, it comes to that. The other interesting bit is, when they've spoken about that they would buy the bonds at the valuations. Now, that's the other interesting thing that I want to see how that plays out because clearly, we've seen a more recent downgrade with Edison's and Split Textiles where now they're a BBB rated, somewhere late last month. So I'm not sure what the valuation of that bond will be. That's the other thing I would want to keep an eye on.
Kaustubh, what kind of message does this also send out to, mutual fund investors and other fund houses with similar exposure as well? I mean, will we see, more of this happening? I mean, what kind of tone does this set?
So it's still just a double-edged sword, because, and I'll be honest, we've had instances, back 10, 11 years back when, some of these incidents played out and mutual funds actually took them on their books. And it kind of set a precedent to investors expecting that, when there is a little bit of stress, the AMC would buy out. Now, obviously, that's not something that you want to make as a normal sentiment for investors because clearly, if, there is something that, happens, it's not really necessary that an AMC should be taking it on their books. These are probably extraneous situations that have played out, and as a just putting faith back to investors who have done this. But this shouldn't become the new normal, is my sense, and because that could just set a very wrong precedent in terms of expectations from mutual fund investors too.
Okay, Kaustubh, appreciate your time, and thank you for joining us.